started dabbling a little bit, but then I got really busy with my current business at the time, and I was building a hedge fund for volatility, so I kind of put it to the side. Crypto winter happened, and then I'm like, what's going to happen? It's not coming back. And then I was isolated, if you will, during the summer of 2020. And I'm sitting by the pool, and it just hits me out of the blue, like reading about M1, M2, everything that at that point in time was being done to alleviate stress in the pandemic, financial stress in the pandemic. And I'm just, the economist in me is saying, wow, this is unprecedented. This is going to lead to massive inflation. Thank you very much. I just started looking around, and I just remembered, the whole thesis behind originally Bitcoin, but crypto in general. And I started doing some research, and the light bulb went off, and I'm like, we've got to do this. And that was like summer 2020. Some folks who were invested with me wanted nothing to do with it, and some did. And I really kind of kept on making the case, and then eventually we just went full bore about a year and a quarter ago, and started dabbling with machine learning, market making, all the different trading methodologies that I'd learned and picked up over my career. But we also started getting involved in DeFi and created what we call a diversified DeFi fund. And so, here we are today, making markets on 16 different exchanges, running some DeFi, and just really, it's just really fascinating. The ecosystem, the energy, the ability to just kind of morph and change into different things as the market evolves, and do it very quickly on a very level playing field, and have a ton of opportunity, which I just don't see going away.
Yeah, they like to say that it's the wild, wild west of finance in a way, and in some degrees it is. And I guess this call is a little bit focused on how we get to I guess that next level of regulating and operating and the real world. Let's see, how about yourself, Dina?
Sure. I mean, first I want to thank both Aaron and Jared for having me, and StandardDAO for having me today. I'm very honored to have the opportunity to talk today. My experience with crypto is a little bit different. So my background is, well, first of all, I work at Paul Hastings, which is a global law firm. I'm in the fintech practice. I do mainly government affairs work, strategy work, and advisory work. And I spent a big chunk of my career working on Capitol Hill. I worked on the House Financial Services Committee and the Senate Banking Committee and the Treasury Department. I was involved with almost every major piece of financial services legislation over the past 20 years, and a few that are relevant. Obviously in the early 2000s, we were having sort of these discussions, sort of pain points in terms of moving online. I guess this dates me, but I've been around for too long. But so things like e-sign, before e-sign, it was state by state. Legal signatures were not considered legally binding. And it's kind of interesting because Gensler was at Treasury then and negotiating with us from the SEC, and he wanted a lot of exceptions. He was very worried about things getting lost online. I can talk further about that, but Check 21, which made checks, electronic checks, also considered to be legal, versus flying checks all over the country. I have no idea how they all got to where they needed to be. I saw a check processing plant once. And I think the most relevant is when I was with Senator Pat Toomey, I was the lead author on most of the Jumpstart Our Business Startups Act, or the Jobs Act, which just had its 10th anniversary 2 weeks ago. And the Jumpstart Our Business Startups Act, or the Jobs Act, makes it easier for companies to raise capital in the public markets, but just as importantly in the private markets. So my work on the Jobs Act is very interrelated to how I got into the crypto space. I came into it differently. During the Jobs Act, one of the provisions raised the Jobs Act, once you went over 500 shares, you had to become a publicly reporting company. The number hadn't been raised for many, many years. And we raised the 500 to 2,000 excluding employment, excluding employees. And it was a very large coalition that wanted that, but most importantly and relevant to this was there were private trading share platforms that were were providing liquidity in things like Facebook and Twitter before they went public. And obviously, it would be beneficial for them to raise the shareholder limit. Fast forward, some years pass, the Jobs Act gets implemented, industry grows around it. I come to Paul Hastings, and my first client is one of those private trading share platforms. It became known as Templum later. And they had to do a little bit of back and forth with the SEC, but they became a private they became a registered ATS and broker dealer that could trade digital assets as securities. I think their plan was very much to provide liquidity to illiquid assets. You always hear about sort of like real estate, art, other types of things that can be illiquid. We were so we started doing back in 2017 when the ICO craze started. We started meeting with the principals at the SEC. So a lot of them are former colleagues of mine. Obviously, some other folks at the SEC, folks in the House Financial Services and Senate banking committees. And obviously, we got a lot of glazed over eyes, and people were confused. But our message back in 2017 was we really want the SEC to provide clarity so that I know this is going to sound funny, so that we don't have regulation through enforcement. Unfortunately, we were like the skunk at the garden party, because the entities that did exist in terms of one think tank and a trade association, they were opposed to all regulation, and so we were just different than everyone else. I saw crypto from a different perspective than other people. My view was, why not just, the problem is the securities laws, which I knew we just touched the surface on the Jobs Act. And so my view was, okay, well, SEC, Jay Clayton's there. He wants to make it easier for companies to raise capital, both in the public markets and private markets. He spoke about it right away. And my thought was, why don't we just loosen up the accredited investor standard more? Why don't we just do other things to amend the securities laws, which are blocking retail investors from investing in a lot of startups? So you have Reg CF and Reg 8+, but not a lot of room for investors to invest in startups. And that's why you have a lot of millennials and Gen Z in the crypto space. The other thing that I was thinking was, you also had a Republican Congress back in 2017. And there was this effort by McHenry and Maxine Waters to, again, change the securities laws and really make it easier to raise capital. It did not, pass in the Senate, but I also thought, why is the crypto industry not lobbying on this? That a number of people that push could have made a lot of difference in terms of making the securities laws work for digital assets. So that's how I got into it. I will finish by saying I then was asked, I know when you're on the Hill, a little bit and do financial services, a little bit about everything in financial services, and you can put the pieces together. Most people, they know their one area. So they know, in law, they'll be a securities lawyer or a money transmission lawyer or a banking lawyer. but they don't necessarily know how to connect all those dots together. And so with my perspective, I wound up speaking before pre-COVID. I wound up speaking all over, mostly California, New York, all over, and also did a ton of writing, etc. And so there you have it. And some of what I have said, and I'm not gloom and doom. I'm really a believer in digital assets and blockchain. But some of sort of my predictions have been, pretty spot on.
Awesome, Dina. Thanks. And I think, Steve, if you want to, try to follow up real quick, and then we'll really get into the meat of this. Dina makes it hard to follow up to that, right?
It's okay. I'll give it a shot. I know Dina well enough that I don't mind. But yeah, for the folks who haven't seen, I'll keep it a little briefer, just because I've had the pleasure of actually being on twice with AMA. So I'm assuming most of the audience might have seen me or has the opportunity to go back and see them. So real briefly is I'm Steve. I've been a lifelong entrepreneur. I joke I was doing startups before they were cool, in the mid 90s, right? It seems like, I'm like startup grandpa over here, I guess, in that respect. And worked at a bunch of different venture-backed startups, and I was always usually the founding CTO or some type of, technical role. So, highly technical over the years, but I also have a degree in, like political science. I also have a degree in economics. Through my MBA as well, and some postgraduate work at London School of Economics. So like when crypto first popped up, like about 12, 13 years ago, it piqued my interest, both from like, just maybe from the libertarian values perspective, but then I can understand things like a deflationary monetary supply, and I can also understand cryptology, right? So maybe a little bit of an oddball, that I can speak to both sides of the equation. And I was running a startup accelerator in Hong Kong, probably around 2011 or 2012, and a company applied, and that was basically running Ledger, like a hardware wallet. And this is like 2012, and this was like the Mt. Gox attacks and things like that. So it was I had no idea how any of this stuff worked. I was very curious about it. So I went on, an exchange and bought a bunch of Bitcoin. And it was $60 a Bitcoin, by the way, at the time, or $67, I forget. I guess now they tax you. So I actually have to figure out cost basis. And never really looked back. I can't say that I'm like full-time crypto person either, but it's been part of both personally and professionally what I've been doing, blockchain and crypto, ever since. Probably a few years later, the last startup I was at, which we sold, I went and co-founded a venture fund. And while we are not predominantly a crypto fund, we have invested in blockchain companies before. And we can't buy liquid tokens, that requires different licenses and things like that. So that I get to explore and dive into those by being advisors to companies that do that. There's nothing that prevents me. I don't need a license to hang out with all you fine folks. And why it's interesting that was chosen to be on this panel is, with a background and a degree in political science, I've always had an interest in the intersection of tech and technology. And I actually started working with a trade organization about 22, 23 years ago, talking about boring issues such as like the Microsoft antitrust trial, HIPAA, things that like we take for granted today, but we're in front of the Congress and the courts, 20, 25 years ago. And have stayed working with that trade organization, and have been to Capitol Hill a countless number of times to either testify or do some light lobbying. I can't really say lobbying because I was never registered as a lobbyist. And obviously the issue with stablecoins has come up, and I feel like there's a bit of a land grab. And we'll get into this in the seminar. This will be a great transition to getting started. So I tried to insert myself into that conversation with the House Financial Services Committee. And I was able to actually speak with them before their first hearing back in February. Dina helped me prep, and it's interesting. And I think the results of that will come out in the conversation. But it's why the regulation I find is important. As Dina said, there's one aspect that I feel like the crypto industry should be raising their hand and asking for certain things, because when they push back on the other things, it doesn't look like they're pushing back on everything, right? So we'll get into that as the conversation transpires over the next 45 minutes or so.
Absolutely. And so for everyone here, if you have any questions that come up, please ask them, post them in the chat. I know that there's going to be questions around, SEC securities rulings, the Howey test. There's going to be questions around stablecoins and all the different rulings that could pass ETF, like whatever it is, post them in the chat. We'll try to get to them. We have a number of different topics. This could go over into multiple series. So, if we don't get to something, we will absolutely get to it in the future. And I think, Steve, you said it right there. We can start it off with, the stablecoin legislation and kind of what that is looking like today and what's the thought.
Yeah, I mean, I can give a quick, follow up to that is, there was a President's Working Group paper released back in mid to late November around stablecoins, which basically said, well, around a lot of things in crypto, but, basically said with stablecoins, like, hey, Congress, go ahead and do something about this, right? And there's a bit, Dina will have a lot of, she taught me a lot of this actually, there's a bit of like a land grab turf war going on between all the agencies, and it has extreme consequences, right? Because is a stablecoin a security or is it a bank? Really comes down to the core question, depending on who's going to regulate it. And I find it critical because if a stablecoin is not acting with fractional reserves like a bank, there is no reason why it should register as a bank. And then if that legislation passes, every stablecoin goes out of business, and JP Morgan is the stablecoin, issuer, right? There's no more Terra, there's no more USDC, there's just USJPM. Right? I might be getting a little extreme on that, but not much. And then, of course, is it regulated like a security? Well, that might be inconvenient, but like, Venmo is regulated like a security, right? Like the cash inside of a Venmo account, right? So it's more than possible to do it. So that is the current debate that's going on. I'll see what Sam and Dina have to say as well.
Yeah, well, I think that you're definitely onto something there, Steve, and you're correct. There's historically, though, been a land grab between the agencies as to who regulates what, specifically what's a security, what's a commodity. I find it interesting that cash currency trading, spot currency trading, is not regulated, right?
Good point.
It's unregulated. So one could make the argument that if crypto is in essence a currency, then why should it be regulated? I think that you're not going to find a lot of takers there, specifically in the two agencies that we're speaking about. I do think that in terms of regulating what's a derivative versus what's a security, I think that stable coins are certainly not a currency, at least yet. I think that they are a derivative. At best, they're a derivative that represents an issuance of or backing of some level of currency. But just like any ETF, for example, ETFs trade at a discount to their net asset value for most of their lives, because there's overhead in running them, right? So there's accounting to take into account there. So should stable coins be pegged at $1? And if they are pegged at $1, how did they get there? What are the mechanics? Saw a really great article this week about Terra and Luna come out, and how algorithmic stable coins are, at first were thought to be a little bit hokey, and there were a lot of questions, but now they're kind of being viewed as, hey, maybe this is the way of the future. On that same note, my experience and my bent on this is a little bit different. I've got a ton of experience in almost every aspect of the financial industry, going back to being a floor trader. I alluded to that in our pre-conference call. Going back to being a floor trader, building technology companies, being CIO, COO, and CEO of exchanges, and then being the CIO of FINRA for 2 years. Which entailed lots of different technological challenges plus cultural challenges, right? So kind of moving it forward, I think that it's, we're at a really, really interesting place as to defining exactly what it is that we're trading, right? Are we trading a derivative? And if we are trading a derivative, who should be regulating that? And I think that we're going to get into that a little bit later in terms of the morass that we're seeing in DC. But I'll kind of kick up this question. I'm sure Dina has probably a more educated opinion on this than I do, but just from what I'm seeing, if you take something like Terra, for example, not Terra, Tether, for example, If you're trading on some of the overseas exchanges, you're seeing a lot of derivatives based on USDT. I think it's getting to the point where I think Binance, something like 80 to 90 billion dollars a day of Binance is being transacted in USDT based derivatives, whereas about 10 to 11 million, maybe a billion, is being transacted in the spot market, right? So, what does that tell you about what it is that we're trading, A, and B, what does it tell you about, well, we have a very large ecosystem that's being built on stablecoins and is worldwide. And there's billions and billions of dollars that are going in and out of this every day around a currency like Tether. Now, as a footnote, I should probably point out that a lot of exchanges in recent weeks have launched USDC, which is Tether competitor, quote unquote, stablecoin, USDC based derivatives and futures and contracts to trade. Now, what does that have to do with us, right? Well, in the United States, we don't have any of that. We basically have an exchange, the CME, which I'm an alum, thank you very much. We have one exchange, and this also goes into the regulatory conversation. We have one exchange that trades futures, and nobody else can. And you have exchanges like FTX, which used to be LedgerX. You have ErisX, which is owned by Cboe. You have Coinbase, and I'm sure they would all love to trade futures, but they're not allowed to yet. And why would that be? We can answer that later, but I'll put it up to the panel.
One quick thing I'd like to just interject before Dina gives us her wisdom is I view stablecoins also, I agree with everything you said, but I want to add one note just for the listeners is, all of us on this panel obviously have been in crypto for a while, or you wouldn't be interested and you would have seen the tweets to come join. But I view stablecoins as an asset also that people will hold, like my dad, who wants to open up a Coinbase account or an FTX account, whatever. And he might go put a couple $1,000s into USDT or USDC, whatever one, and then use it as a, for pre-settlement, right? Like, basically use it to then exchange it into Ether if he wants to buy some Ether or some DeFi coin or whatever it is, right? Like it's the symbol of that, like, once the stock markets went to T+3 back around like 30 years ago for trade settlement, everyone started putting cash in their brokerage accounts, and the brokerages started becoming like mini banks, right? And had to started the amount of cash that went into like the Morgan Stanleys and the Fidelities of the world shot up. So I view stablecoin as an on-ramp for regular people like coming into crypto, and then folks like us, it's like where we, instead of having to like convert from fiat, because especially if you do that on an exchange, they have like 5-day waiting periods. You just hold it into stablecoin because it's going to be roughly $1, and then you use it, go into Ethereum. So I view it as a critical, besides all the arbitrage and derivatives and futures and all that, I view it as a critical thing just to facilitate the ease of trading, right? Then you don't have to deal with fiat as much, right? You just dump it into the stablecoin. So that's why I'm such an interest in the issue.
Yeah, no, that's exactly my point. That's exactly what I was getting at. In the world of centralized exchanges and even in decentralized exchanges, the lingua franca is USDT or USDC. You can settle, and we do some off exchange trading ourselves, and counterparties prefer, and we prefer, to settle with USDC. It's just easier. I'm sending it via the Ethereum chain. It goes out, it comes in. I don't have to send a wire. I don't have to go through the Fed system. I'm not trying to avoid anything. I had a saying when I was the CIO at NYMEX, and we were dealing with the same sort of regulatory question about, ICE is operating the International Petroleum Exchange in London, but it's being cleared and traded in Chicago and mostly by folks in the US. Do they need to be regulated by the US? And so it's kind of like the saying is that capital finds a way to go where the least amount of friction is. And as my short way of saying, or my long way of saying, that we much prefer to just kind of exchange USDC and our ETH and USDC back and forth, and it's it doesn't have to do with anything other than the fact that it's easier, quicker, and cheaper.
Okay, I am ready to talk about stablecoins. Let me start. I'm going to look it through more of a policy and political lens. Let me start by saying, in the big picture. So when it comes to technology and technology policy, it's not as highly regulated as financial services. When it comes to financial services, anytime you're moving money in any way, and I'm not the one that made these rules or set up this crazy system that has always been crazy in my lifetime with all the different regulators. So if you're dealing with moving money because of the national security concerns, systemic risk, paying the IRS, a variety of reasons, you have to deal with the financial services regulators, and you have to deal with the appropriate one or ones. And, it's called, and I'm sorry to be basic, but depending on your underlying activity, it's called functional regulation. So if you're acting like a bank, if you're a national bank, you're working with the OCC. There's the states too, right? So the states, regulate the money transmission licenses, and there are state banking charters. So if you are, doing an offering and it's a security, you're working with the SEC. And by the way, there's only 3 kinds of securities. Somebody taught me this. There's public, private, third one is illegal. Okay, so 3 kinds of securities. So let me go a little bit into what's going on in Washington, and then give you sort of my take. So the reason stable coins is a hot topic in Washington is I think it's tangible. People can wrap their minds around it, but also because there is a deep concern by Janet Yellen and the Fed about how stable the stable coins are, and that there could be a run. Stable coins today are regulated, are regulated, yes, at the state level, but they are not in the financial services sector. Generally speaking, you can't make up your own set of rules, or maybe I should say it more nicely, you can't just come up with the best practice and go with it. Unlike the tech industry where you can do that kind of thing. So no matter what a company is saying, even if they're saying I'm holding dollar for dollar or whatever it is, that's good and that's great, but you still have to be regulated in some way, whether it's by the SEC, whether it's by the Fed, etc. So on to stable coins in terms of what's going on at a federal level. You have the President's Working Group report that came out with the stable coin report. It said essentially that currently stable coins are mostly used to park cash before investing in other types of cryptocurrencies. So, Gary Gensler calls that the poker chips. I don't call it that. It seems like money market funds, right? And then it says, but we see tremendous potential for stable coins and payments, right? It's payments, you move, moving one thing to another place. And to the extent that they're going to be used for payments because they're less friction, less costly, those types of things, we believe it should be regulated like a bank. And Congress, we want you to pass a law that says that stable coins should be regulated like a bank. And if you don't pass a law, which by the way, it's hard to pass a law in Congress, then we're going to act. We are going to potentially use our authority. The Financial Stability Oversight Council was headed up by Janet Yellen. We'll use our authority to potentially designate stable coins as systemically important. if you're designated as systemically important, then you wind up being regulated by the Federal Reserve, which nobody likes to be regulated by the Fed. There are always onerous capital requirements, and they treat every company like it's a large money center bank. So there's that. Then you have some legislation on the Hill, and there are a variety of pieces, so I may miss one. There's a Gottheimer bill, which is actually pretty well written, which is sort of based on the banking model, but there's also sort of a special purpose model. Then you have Toomey's interested introduced or put legislation out there that has sort of three principles. One is you can continue to be licensed at the state level through the MTOs. You can become a bank or like some kind of special purpose charter. And McHenry has talked about, and Senator Toomey's my former boss. The one thing that's really funny about the legislation, this is nobody that I spoke to, but some of our capital markets people pointed out to me, is that the Toomey legislation ties itself in knots to try to cut the SEC out from anything. So it's kind of funny. And McHenry has been very much, I think, in a very similar space to probably where I am, which is functional regulation. What is the stable coin doing, right? So to me, if the stable coin is a place to park cash before you invest in something, it reminds me of a money market fund. Now, the Federal Reserve, they hate money market funds. They don't like anything they don't regulate. They think money market funds are subject to runs. But, you know, they've tightened up the regulations a couple times. But the reality is money market funds were developed by the SEC in the 70s. So maybe there's another product, everyone's afraid of Gensler, but maybe there's another type of product that could be created for stable coins when they're used as a way to park cash. Now, more importantly, stable coins have tremendous potential in the payments world. Right now, we essentially have 4 major networks, and we have a lot of payment systems that hook into those 4 networks. These are global networks that are used worldwide, like Visa and MasterCard. And generally speaking, every, with transactions, debit, there's interchange fees, right? And there's not a lot of competition in terms of interchange fees. So stable coins really could come in and be disruptive in terms of either current companies changing the way they move money in a faster, more efficient, cheaper way, or for new entrants to come in and create new rails where you have money that is, again, faster, cheaper, frictionless, all those kinds of things. So my concern is that with stable coins, that this push to regulate them like banks is very scary, because today payment systems aren't regulated like a bank where they have to hold all this capital. And again, if you I'm afraid that stablecoins and other parts of the crypto industry will be regulated more than they would be under current law, which would be a shame, because we wouldn't have that competition in the rail space. And I think that if the in the rail space, in terms of payments, etc., I think if there's not really cooperative work with the Federal Reserve, the Treasury, the states, etc., then we start to see central bank digital currency. And with that, I know that's another conversation we may be getting into, but central bank digital currency can mean different things, right? and we can talk about that, but it could mean replacing like the ACH system, like bringing in new rails, right? Or it could mean like a big power grab and like having Fed accounts and like pushing stable coins out. So I'll stop there because I think that's a whole other topic in itself.
Yeah, and that's actually something that we're pretty interested as well on the CBDC side. And so with the CBDC, something that comes up a lot is the lack of privacy factor, or the fact that, Big Brother is now watching you, at all times, basically, right? And, with cash today, people are very comfortable with their cash transactions. Every single day, people are making private transactions, right? And, with the invent of a CBDC, in theory, that kind of goes away, right? Now that Big Brother can see everything you're doing. And so is there sort of a pitfall to the CBDC model where now they know everything that we have going on, or should a privacy mechanism be introduced to it somehow?
Well, I think like everything in life, Jared, that the devil's in the details, right? So when you look at, I don't think anybody on this panel, and I'm thinking maybe even in the participants gallery, would be kind of in favor of moving to a digital yuan, right? Because we know that that's loaded with things that we just, as Americans, we're not going to find very savory. So when you go to a CBDC in the United States, for example, well, how is that going to be implemented? Nobody knows. Is Big Brother going to be looking over your shoulder? I am sure that no matter how it's implemented, everybody's going to be saying, well, people are tracking me, like like the chip in the vaccine, right? So you're always going to have 50% of the country saying one thing and 50% of the country saying another thing. That's just kind of the way that that we are right now, unfortunately. But more to Dina's point about stable coins and regulation. Should they be regulated? Should they not be regulated? Again, the devil's in the details. I think it really depends. You have a couple of proposals out there, most notably, I'm sure that we'll get to the FTX proposal for clearing, right? Well, if FTX is going to become a DCO or DCM, designated clearing organization, for those of you in the audience, which will then be regulated by the CFTC and then be able to offer futures, which are then based on a stable coin, well, then you can kind of see what the problem would be with maybe having an unregulated stablecoin. Now, full disclosure, I am not a regulation-heavy guy, right? But what I'm just saying is, logically speaking, if you want to be a DCM or if you want to be a DCO and you're going to offer a product based on another product that's not regulated, well, we've got to figure out what the construct is there, and we've got to figure out how that's going to kind of blend into the existing system of regulation, or just don't be regulated.
I tend to agree with that, and I look at it from the perspective of we're comfortable today, and the government's comfortable today with, as was previously mentioned, like private transactions. But then on the flip side, then why would we then give up privacy for the convenience of the technology, right? Like, so like privacy provisions will have to be put in there, and there should be some table stakes around things like sanctions enforcement and KYC, things like that. But then your transactions, you should still be able to transact privately, right? Like, I mean, the whole country got into a huff when Joe Biden said, "Hey, I just Venmo'd my grandchildren some cash," and then we all saw the transaction, right? And then Venmo quickly changed the privacy rules, right? So I feel like we're all following this, right? So it to me, it opens up a big can of worms.
So let me add to that. So I know a lot of people talk about the U.S. being behind because we don't have a central bank digital currency. I don't know if we're behind. I think we're wise. I would never use the digital yuan. Like, I don't want people to be tracking how much time maybe they're going to be tracking somehow my kids' video games or something like, or tracking say, oh, she buys too many sweets, or telling me knowing about all my doctor's appointments, or all my pets. It's none of the government's business, right? So I think the fact that we're moving slowly, and even Janet Yellen has said that central bank digital currency will take a number of years to develop. And then we do have to consider privacy. So the reason there's talk about the central bank digital currency is because other countries are doing it. But I also think that there's a fear in terms of the dollar being the reserve currency. That's why you had so much fear about Libra. Libra just needed to headquarter itself in US and be US stablecoin, right? But what I would say in terms of the dollar remaining the reserve currency, obviously it has to do with people trusting the dollar because they trust our government. It's not perfect for sure, but they trust our government, where they trust our legal system. But just as importantly, the US has the most robust private sector. And so, if you brought CBDC in it and you define it very broadly, you're going to push out that innovation in the private sector. That innovation in the private sector in terms of payments, the brands I was mentioning before, part of the reason that the dollar is the reserve currency is because our payment systems are name brands that people know and they're all over the world. So we want to create the best new rails that we can. And so they're used globally and we can continue. I know some anarchists won't agree, but we can continue to maintain the dollar as the reserve currency. It's certainly, in terms of sanctions and things like that, it's certainly a lot cheaper and less dangerous than the US having to spend even more on defense or put more boots on the ground. There's a lot of, so my view on the central bank digital currency is that the Fed should view it as a technology upgrade. They need to be careful how they do that upgrade because the technology is still rapidly changing and it should replace the rails that they run today. And maybe partner up with the private sector in terms of the interfaces. I'm not a tech person. Interfaces in the US and the interfaces globally as well. I think there's been a lot of talk about how that central bank digital currency would be a solution for the unbanked and the underserved. I am very skeptical of that because I know about the unbanked in the US. I spent many years working on those issues. The unbanked, many of them are, people from other countries that didn't trust their banks, people that have had a bad experience at banks. They use check cashers and things like that. They're very nervous about banks, right? So, an authority. So if the Federal Reserve, I don't think they would take over every bank account. That would be a disaster. That would be like, like the VA, like some of the, the government couldn't get all the cash out the door when it came to stimulus checks and stuff. So, but when you talk about financial inclusion, in setting up a Fed account, do you think the undocumented immigrant is going to run and sign up for a Fed account? I highly doubt it. Do you think someone that's mostly operating in cash, living paycheck to paycheck, is going to want to open a Fed account? Nope, I highly doubt it. So I think it's the wrong approach. I do think that the smartphone, responsible social media, maybe phone carriers, companies that have great reach, have a better ability to bring financial services into the mainstream. And even though we all are, we are concerned about social media and its largesse and things like that in competition, most of the country, when you get off the East and the West Coast, they like their social media and use it, right? So it can be easier to reach them in terms of like banking them. So those are my thoughts. Like the last thing I'll say about it is that, again, I am not a technologist, but we do have digital money today that moves on something, right? I have no idea how it works on the internet, I guess. When I buy something, I go and I buy a purse. I don't even like think about how the money is moving back and forth, right? It just happens, and it happens like fast and efficiently. So when you think about stable coins and the underpinnings of the technology, like proof of work, proof of stake, those kinds of things, we have to be really careful, because what comes next after proof of stake? And also, what will we get to a point, and this may scare people, where blockchain or DLT, and this is in the future probably, runs by itself, almost with AI. And normally, we're talking about stablecoins and the technology underneath payments. Normally, I couldn't even tell you how it works now. Normally, we don't even think about it at all. We just do it, right?
Yeah, absolutely. I think when we think about, financial instruments and, these sort of like innovations that are coming up, there's also stuff that has been around for a long time, like the ETF, right? And something that we've been waiting on, from the crypto side, is the Bitcoin spot ETF to find, it's like a unicorn at this point. Like, we're waiting for it to come around. What, for those that are listening, what are the implications of the Bitcoin spot ETF on the crypto markets as a whole, and why is it so important? Why are we all talking about it so often? Whoever wants to jump on that one.
Well, I mean, if you
Go ahead.
Oh, okay. I mean, look, I think that it's a great conversation to have, but once again, to kind of throw up the flag and say, who regulates it? I think you have a really big issue first of saying, well, who's going to regulate this? It's going to be a security, but it's a security that's based on what? It took years for a gold ETF or a natural gas ETF or an oil ETF to poke its head out, which were based on regulated futures. And so I still think we're going to keep trying and pressing forward with a spot Bitcoin ETF, and there are a lot of good proposals out there. But I think the reality is that until we figure out who actually regulates the underlying asset, I think you're still a ways off.
Yeah,
I can talk about it. Or, go ahead, Stephen. I'll let you go, and then I'll go. I'm going to talk more about the political side of why it hasn't happened yet. So
yes.
Go ahead.
Yeah, and I can't really speak to that as well as you can, so I'll skip over that in my remarks. Real briefly, I feel like one of the reasons why we don't have the ETF, besides the political, is the complexity also of just setting it up. They're not as easy as you think it is, right? You have to be able to be very liquid, and when you have this tremendous volatility. On the flip side, though, why is it important? Is regular people, I keep saying regular people, I hope it doesn't sound pedantic or condescending, right? But non-crypto natives, right? That may be the way to put it, right? Want exposure to crypto now, right? And an ETF would be appealing to them. And if they're not going to have an ETF, they're going to start to think about things that the government is, more nervous about: stable coins, DeFi exchanges, et cetera, right? So I think it's in everyone's best interest to start figuring it out. But that's why it's important. It's important because more and more professional investors and more retail investors are reading about crypto, are getting educated about crypto, and want some exposure to it in their portfolio. Like more and more pension funds and endowments are putting, I think the standard now is about 3% of their assets are now in crypto, right? And that was unheard of 4 or 5 years ago, right? So that's why they're important. I'll let Dina tell us why it's taken so long. I've listened to a couple of podcasts and it's fascinating. So
well, just if you don't mind, just before Dina kicks off the politics, I think it's important to let everybody know that there already is a Bitcoin ETF, right? It's based on CME futures.
Right.
Yes, but it's based on CME futures, which, by the way, closely track an index of several different spot exchange Bitcoin settlements, and that's been developed over years by the CME, that particular index. And it's really important to note that the premium between futures and the cash markets, meaning the differential in price. Futures usually have a differential in price called the basis to the spot. The basis right now is about flat. So buying that Bitcoin ETF is essentially like buying Bitcoin in and of itself. There are some structural issues that, you know, is probably a little bit much for this call, but suffice to say, there is an ETF out there already, and the response, quite frankly, has been lukewarm. So sorry for jumping in there, Dina, but I figured that would be a good tee up for you.
No problem at all. So, I mean, some of the things that both of you said are the reason why there's not a Bitcoin ETF. And, you know, even Jay Clayton wouldn't approve one because of, you know, concerns in terms of pension funds, retirement funds, and sort of you're affecting now a broader swath of people and retirement funds. So there is, as you said, there is a Bitcoin futures ETF. And, you know, Gensler was willing to go ahead with that because it's on, you know, I am not as good on the CFTC side, but because it's on a, you know, it's on a federally regulated exchange. So when it comes to a Bitcoin ETF, it was funny, I was having a conversation with a bunch of people about this last night. Let me talk a little bit about the politics on the Hill, which I spent most of my time. So there are the financial services committees, House Financial Services and Senate Banking. And then you have that have jurisdiction almost over every single financial services issues, except CFTC, derivatives, and swaps. Then you have the agriculture committees in the House and the Senate that have jurisdiction over the CFTC. Since I come from the banking world or the banking committees, I have a bias. Like both of the chairs of the committees of the ag committees, great people. But if it were up to me, the CFTC and the SEC would be one and the same, and it would be, you know, in the jurisdiction of the banking committees. So the reason that the CFTC has enforcement authority over the spot market. This is all spot markets, including like corn and things like that. And but they don't have full regulatory authority over the spot market. So I'm not trying to sweep the farmers in or anything like that, because they would be very concerned about being swept in and having to be regulated by the CFTC for the spot market. But to regulate the spot market takes legislation. The question is, can you get legislation done because of the tensions, not so much about partisanship, but between the committees. If you were able to get the spot market regulated for Bitcoin and Ether at a federal level for market manipulation and those types of things, then I think that Gary Gensler would be, it would kind of force his hand to approve a Bitcoin ETF or even an Ether ETF. The other thing that's interesting about all of this is, I don't know if you guys noticed that, you know, Gary Gensler put out statements recently saying, hey, CFTC, we would really like to work with you on exchanges on cryptocurrency because we have overlapping jurisdiction. We'd love to be partners and work together. Well, again, I have a banking bias, so I don't like this, but it does create a fairly good outcome. If you took Bitcoin, which everyone has said is not a security, Gary Gensler won't admit that ETH is not a security. But if you had spot market regulation of Bitcoin and Ether, the numbers change on this daily, that would be a huge win for the CFTC, because they would be controlling about 75% of the crypto market. And then the path is cleared to the Bitcoin ETF. Now, I think it's a great solution. Obviously, altcoins get left out. I don't think, as I said, you don't bring the farmers into the whole thing. The only thing I don't like about the solution is that it does push things into the CFTC, and I have a banking committee bias. But pushing things in the CFTC allows for retail investors to be involved, and the current CFTC chair, Rostin Benham, is a very, very reasonable, works across the aisle, knows how to get things done.
Awesome, Dina. And I think we could do a minute for response on that. I think, Dina made some interesting points, and then we'll kind of wrap this up, and we'll touch on a couple of things at the end.
Yeah, real briefly, I can say is it's endemic of the turf war that's going on, right? So I mean, if you look at what's going on, is I as a concluding point, I would say that one of the reasons why the turf war is so fierce, right? You have the commodity. I mean, everyone wants to regulate it because they actually see this both as, they see this as the future, right? So I think on one hand, we can view this as validating as an industry, right? That there, if we were building something and the federal government just had zero interest in regulation, you would argue that maybe it's just maybe a little too early, or a little bit it's not going to pick up. But clearly, we've caught the attention of the regulators to the point where everyone wants to regulate it, right? And is fighting over who's going to do it. And ultimately, I think my solution is you'll see different aspects of the industry potentially regulated by different organizations.
Yeah, and I think I'll just close with saying I think it's going to be very interesting in the coming months to see how this does unfold essentially between the banking committee and the Senate Ag committee and the Chicago exchanges and the the upstarts that are applying for DCM, DCO status. So stay tuned. It'll be interesting, but it would be great to get a conclusion.
Let me close by saying that we did something we didn't talk about much, which is I know everyone is concerned about Gary Gensler. He makes a lot of noise. People are worried. I have a much bigger worry here. Just because a regulator is not as loud doesn't mean that they aren't doing as much work, right? So if you look at the executive order on digital assets, which is just a bunch of reports, but if you strip it down, at the end of the day, most of the reports are led by Treasury or the Fed, which is kind of one and the same in a lot of ways. Yellen is they work together, the symbiotic, and Yellen was Fed chair and things like that. And so the thing that I worry about is this favoritism towards bank regulation. And the reason I worry about it is that it's very possible if the industry doesn't get its sort of minds together and start putting proposals out there, that just because we're using an innovative technology, we could wind up with cryptocurrency being regulated more than what exists today under current law. I am concerned about a big Fed power grab. They think that everything should be regulated like a bank. Everything else, securities, the states, that's all quote unquote in the shadows. So I hope that we can get all of these financial services issues, get gain certainty, which the industry needs to do work to get that. But what I'm looking forward to, and especially you guys are involved, Steve, you're involved in startups, is what's to come. What's to come after on this financial services space, what's to come outside of financial services. And this sort of renaissance we're going to see in terms of startups using this new technology. That's what I am excited about and waiting for.
Yeah, I think those are really good points, and that at Standard, that's what we're focusing on, and also making sure that the technology is positioned as a technology, and the financial service arm of it is positioned as such and kind of regulated as such. And there are distinguishing those two aspects because there's very kind of under spoken about aspect of blockchain technology that we need to be pushing forward that, might stand outside of the realm of financial services. There obviously were many topics that we didn't get to, and I think that's a beautiful thing. We can definitely have future conversations. Some of the big ones we've got these algorithmic stablecoins that are now purchasing large swaths of assets into their treasuries with what we're having with UST and Do Kwon and everything that they're doing with LFG, and we've got other topics like specifically the XRP conversation and how we test in these things, right? And we didn't even get to that. So that's amazing. We covered a few really kind of large topics. If there's anything in the future to cover, I think, leveraging our community and everyone that was able to join us here, please reach out. Kind of housekeeping for everyone that's in the know or not in the know more so. With Standard, more formally, we do have a private sale that will be opening tomorrow. And if you want more information on that, please, reach out to us. You can reach out to our investor relations team, ir@standarddao.finance, and we'll be happy to, make sure that you have the proper knowledge around that. And for everything else, Steve, Sam, Dina, we're gonna do this again. And this is an amazing conversation. I appreciate everyone coming on and everyone that participated in the conversation in the chat. Please tell your friends, tell your family. This is a life-changing moments.
Thank you, everybody. Thanks to Standard for having me on.
Yeah, thank you. Thank you, Aaron. Thank you, Jared. And thanks to StandardDAO.
Yeah, thanks for coming on, everybody. Have yourselves a wonderful week, and we'll be in touch very soon.
You too.
Thanks, everyone.
Yeah,
Bye.
you too. Great.